welcome to this special broadcast of Nigeria's MPC meeting, the first meeting of the year. I'm Mr. Awuni. Many thanks for joining us today. Now, in 2024, the Monetary Policy Committee raised the lending rate by 875 basis points as inflation remained high. Now, so far this year, we've witnessed the rebased consumer price index, which stands at 24.48%, and we're still awaiting the release of the rebased GDP numbers. But beyond that, some global central banks are adopting a cautious stance, driven partly by concerns over the potential spillover effects of the new U.S. trade policies, particularly tariff hikes. The U.S. Fed kept rates unchanged at between 4.25% and 4.5% after 3 consecutive months of easing. The European Central Bank also maintained its accommodative monetary policy stance. On the other hand, the Bank of England adjusted its policy stance at its February meeting, unanimously voting to lower the bank rate by 25 basis points to 4.5%. Now, in Africa, the Bank of Ghana's Monetary Policy Committee left its policy rate unchanged at 27%. However, the South African Reserve Bank's Monetary Policy Committee voted unanimously to cut its main interest rate by 25 basis points to 7.5%. Now, what stance will Nigeria take? Well, today for our conversations, I'm being joined in the studio by Bismarck Rewane, CEO of Financial Derivatives, Kubi Momoh, Chairman CitiTrust Asset Management Company, and Gregory Kronsten, a consultant on African economics. He joins us remotely. Thank you, Gregory. Thank you, Bismarck. Thank you, Kubi, for being in the studio with us today. First meeting for the year. We've waited for quite some time now. Of course, we had that delay because the NBS had to, put out the rebased CPI and GDP numbers. We're still waiting for the GDP numbers. But I wanted to just, start off before we, have the governor comment. Bismarck, let me start with you. I wanted us to start with the CPI numbers, the recalculated CPI numbers, because I know the governor will definitely highlight that today. So we're around, 24.4%. Talk to us about what your expectations were, because I know economists did their own calculations too. We knew the numbers were going to be lower, but did you expect them to be this low?
Let me say, I knew in terms of trend analysis that the inflation was beginning to decline. But the magnitude of decline as a result of the new methodology is what we're talking about. So we used the old methods with the old basket, and we came up with approximately 2% reduction in inflation, from 35 to about 33, actually. And what we did was clear. But what you have seen now is a 10% decline, right? So we think that 2% of that 10% was as a result of the natural trend of inflation, and 8% of that 10% was a result of the method change.
Right.
But you must know that they did not show a month-on-month inflation, because that month-on-month is more accurate than year-on-year.
Right.
So I think, personally, I think that, yes, it is true that there's some disinflation. And the reasons are not far-fetched. One, the exchange rate has appreciated by 7% this year alone in the parallel market. The price of petrol and diesel has come down by about almost 10% since November. And we've seen, so currency appreciation, diesel cost and petrol reduction. And we've also seen consumer resistance. And typically, in the months of January, people spend less because on commodities because they paid school fees, paid rent, and all of that. So traditionally, January is a slow month.
Right.
So all of this is happening, and therefore, we think that the new method, the old method, and then the real method will give you three methods, 3 outcomes.
Right.
So, but what is consistent in the 3 methods that we have seen a level of disinflation, but not to the magnitude that is being published. There's a difference between sound bites and analysis.
All right. Now, Kubi, let me bring you in. Obviously, like I said, obviously we're expecting a decline. But how significant is this for the CBN? We've gone from over 30%, now we're talking about 24%, and there's a 15% target that the CBN and fiscal authorities are hoping to achieve this year. How much of a game changer is this for the MPC?
Well, I think for the MPC, they will be quite pleased with these numbers, because not only are we talking about a 10% decline on the inflation rate, one of the key variables is that the inflation rate is now lower than the MPC rate. And that's a huge game changer. So it's much lower inflation on inflation. Then when you compare it to the key rates in the economy, it's also lower. It is also lower than the 1-year yield on Treasury bills. Currently at current levels,
what,
I think
25,
it's still,
I think.
yeah, or it's close. Yes, it's quite close. So
Yeah.
effectively, so in terms of, if you look at other rates in the economy, it is actually lower. I mean, fine. I mean, I know Bismarck said that we're looking at, its computation and all
Right.
that, but at least on paper, it's lower than some of the real returns that are available if you're looking at commercial papers or some other instruments available, and that's significant. So I think central bank would be pleased around that. I think it gives them some room to play in terms of the direction of where rates will go, which is, of course, one of the key things that we're looking at this meeting.
Right.
And whether they cut or whether they hold, because everybody's looking at will it be a cut or will it be a hold, I don't think anybody expects that rate to go in the other direction. One of the key variables that central bank can also look at is the asymmetric corridor around the SLF and the SDF. Even if they don't do a tightening, if they don't contract the rate, they can tighten that corridor to, which will help the overall cost of funds for banks that are borrowing from that window, and then it will also prevent an arbitrage, banks arbitraging on the SDF rate, because currently the SDF rate is significantly higher than the T-bill rates available in the market, which is a function, of course, of system liquidity. So there are a whole lot of things for CBN. It gives CBN a lot to chew on, I think.
That's an interesting point you made there. Gregory, I'd like you to weigh in on this conversation. I know you heard Kubi Momoh talking about how inflation rate is now lower than, the 1-year Treasury bills and, of course, the key lending rate. What kind of comments are you expecting to hear today from the CBN governor?
Well, thank you. So, the first thing to say probably is that the new rebased rate brings Nigeria sort of closer to the sort of EM universe. Before it was an extreme outlier, maybe because there's been a 15-year gap since the last rebasing. 2009 was the previous base year. So there's been a huge change, but as has been said, we've moved very quickly, just at the flick of a switch, or let's say release of new data, from negative to positive in terms of real rates, if we're just looking at the monetary policy rate. So I think it's not a big, it's very welcome. The MPC is in a very difficult position. When else? And I think their meeting, I understand, has been delayed at least once this year already. So, here they are, they're confronted with the data. Perhaps, they've got to look at it before we did probably. But, it's not ideal to have such a short period in which to have an MPC meeting. Probably they couldn't postpone it another time. It wouldn't look very good. So, and I suspect that the temptation will be, temptation will be to cut the rate, but I think that would be rather rash. And my expectation is no change in the policy rate. The other point is, go on.
No, go ahead. Finish your thoughts.
Yeah. The other point is, obviously, what's the direction of inflation in 2025? As Bismarck's highlighted, look at petrol price, parallel market rate, there have been some welcome developments. But, after all, the purpose of, the main purpose, mission of the central bank is price stability. And they got a very welcome boost. But I think it would be a bit rash to move today. The point is that the food, what's transformed, of course, the index, the rebasing, is the massive cut in the waiting for food, which is down 10 percentage points.
Right.
So that explains why we've ended up where we've ended up.
Right. Thank you for that, Gregory. Now let's talk about outcomes, your expectations from the meeting today at Bismarck. We've seen the naira strengthen, stabilize around 1.5 at the official market at least, and the parallel market also come in within that neighborhood. But what are you expecting today? Hold, cut?
I think a hold, so that we can see whether there's a consistency. One data point is not a trend, and so naturally, central bankers are conservative, so I think they will do that. But having said that, I would not be surprised if they move down by about 25 basis points to send a signal to the market that things are happening. But you see, the Treasury bill auction results that came out showed a 100 basis point cut, right? already.
Was it 200?
200,
right.
so for 1 year, but the shorter end is 100 basis points. So I think the signals are clear that we are in a easing mode.
More accommodative.
More accommodative. So monetary conditions are going to be loose, while monetary policy will be easing. You don't want an overheating of the economy and to reverse yourself so quickly. So I think that independent thinking will suggest one hold, and then in May, if you have now 3 data points of inflation consistent, then you can then do what you have to do.
Right. Now, Kubi, are there specific comments that you're expecting the CBN to make today? What are you looking forward to hearing, maybe around the exchange rates?
Okay,
what's in your mind?
My expectations around the exchange rate, I would expect that CBN would be crediting some of the reforms that were done towards the end of 2024. So, like Bismarck said, we've seen exchange rates at about 1,500. The narrowing of the premium between the official and the parallel markets is impressive. I'm not sure the premium is certainly not up to 1% at the moment. It's been less for a while. I don't even think it's up to 0.3 or 0.5. So that is good. And towards the end of last year, there were a lot of reforms in terms of the FX code that took effect, I think, on December 1st, the electronic FX matching, the speed of reporting to CBN, the transparency around the process. And I think we've seen results coming from that. If you look at the way the market is and the way rates have been extremely moderate, so especially when you look at a strengthening dollar to some extent, the Naira has done very well. So specifically, I do believe central bank will speak, they will speak about that. On inflation, of course, they're going to make references to it. And then in terms of other announcements, other pronouncements, I think there will be some pronouncements around the asymmetric corridor right, around the MPR. And I say that because I take all the feedback about you don't want to cut too soon or too fast because you're looking, the outlook is for stability. Yes, I agree on that completely. But if you look at the macroeconomic around the rates, the treasury bill rates are down, and we have an inverted yield curve at the very short end, in that my overnight rates are higher than my 1 year rates because the treasury bill rates have been coming down significantly. So if CBN may be speaking to a correction in the different markets. So that's what I'm expecting.
I'm interested. Now Gregory, now some analysts have been saying that with the moderation in inflation as a result of the recalculation of the consumer price index, the CBN should just, cool things down for now and not hike at this meeting and wait for or rather allow the fiscal authorities to take the lead in addressing inflationary pressures going forward. Do you agree with that sentiment?
Well, I think what the MPC should be doing is remaining cautious, and there's been the rebasing. We haven't actually seen the full data. We've seen the weighting, which is the most important, and we've seen the basic calculation, but we haven't seen the historic series, which would be very welcome. So I think that they. What we're looking for is a few months on inflation. And there's some encouraging signs. I mean, I think obviously the exchange rate. Another thing to say is, always talk about tariffs in the US. I think, nobody's going to, who can prophesy what Mr. Trump is going to say, President Trump, I should say. But the point is, I think he's got a thing in his head about countries with which US has very large trade deficit. So that's not really a Nigeria story, is it? I mean, it's a sort of China story, a Germany story, if you like. So I think it'd be interesting to see what he says about the global environment as well.
All right. Thank you so much for that, Gregory. Now, let's talk about the broader economy this year. And I think growth projections for this year from both the fiscal authorities and CBN still under 4%. Now, we have a much bigger budget, 54.99 trillion. And, of course, there is pressure on the key government agencies to bring in more money. Well, the fiscal authorities appear to be confident that, the likes of between the FIRS, the Customs Service to rake in more cash this year. But what do you think in terms of how we're going to fund this budget, Bismarck, and the kind of borrowing we should expect in the domestic market?
I think the revenue profile changes. First and foremost, 50% of the revenues collected by the agencies are retained by them, and 50% is remitted to the central treasury. But the obsession with revenue increases is not the same thing as growth in GDP, right? So, having said that, 54 trillion naira for the federal government budget, if you double that to 100 trillion naira in a 350 trillion naira economy, government expenditure, both state, local, and federal, is nothing compared to what is required. So it's not going to move the needle as far as growth is concerned. But it will definitely reduce the amount of borrowing that the federal government and state governments will have to resort to. Now, having said that, if you reduce the borrowing, and right now they are not funding it through ways and means, so one of the major causative factors of inflation has been high-powered money, which is borrowing by the federal government without inappropriate rates. So if you did that, that creates some form of macroeconomic stability, reduces inflation generally, or the factors that cause inflation, and that could be growth enabling. So in terms of GDP, I think that the GDP numbers are going to come out, and you're going to have figures close to about $500 billion from 300 billion. So
right.
It's good, again, but it doesn't increase output. It's just a question of having a more current base year and doing that. But when you look at GDP per head, after you factor in the population, GDP per head is much lower than what it was, say, 3 years ago. And the spending, people's spending, right, is dependent to a large extent on their income per capita. So, if income per capita has actually declined, yes, the government revenue expectations are higher, the efficiency of raising revenue is much more efficient, and borrowing for it is through a much more efficient method, right? So what you will see is stability in inflation rate and moderation. You will see a much more efficient revenue collection mechanism, and you would see that if interest rates begin to decline, then people begin to borrow more rather than spend money, spend a lot on debt service. So generally, we are heading into an environment of improving macroeconomic stability, but we shouldn't be carried away by the fact that you're having these jumps. All these changes are not a result of any work or anything. It's just as a result of, to a large extent, cosmetic surgery.
Kubi, I wanted to talk about, let's talk about the banks, the financial sector. I mean, we're still on our way to, the whole idea is to have a $1 trillion economy. Let's talk about how the banks can support that and support growth this year. The recapitalization exercise appears to be going well so far, and the CBN is happy about that. But talk to us about how the role banks can play this year in supporting the growth of this economy. They should have a bigger war chest when the exercise is all over. So where would growth come from?
So especially for the tier 1 banks, a lot of them have taken some big steps towards meeting the new capital figures. They might not have fully met them, but they've done maybe some of the bigger banks. I think one has done 100 or so, and then the rest are fully on the way. They will do second series, third series. And what that means is that those banks, their ratios have improved immediately. So they have more capacity to lend, and that definitely has a positive effect on the economy. They have that capacity in terms of volume, and then also in terms of the types of transactions and the tenor of those transactions, which is key when you have a developing economy. You want deeper capital. Right. You want to have, for what you're not doing in the capital market, you want to be able to finance transactions that can develop the economy. So there's a positive cycle between what the banks can do and the impact on GDP in terms of the growth for the country. So we think that's good. Banks continue to lead the way in terms of automation, in terms of the volume, the velocity of transactions. So if you look at how money moves in terms of electronic payments, that's another thing that banks have been very strong on. We've had, I think, a doubling in terms of the the NIP, which is the instant payment figures. We have a huge amount going through POS, and then checks have almost become dinosaurs. So that's another, and that's also okay. The speed of that also. The speed of money movement is facilitated by the bank, and then that has an impact also on the velocity of circulation. Yeah.